Mohnish Pabrai's recent investment in Reysas Logistics fell by almost 50% last week. In light of the fact that this company is trading at prices near where Pabrai bought in initially, let's figure out what this company is actually worth. Hey everyone, welcome back to the channel. My name is CJ, and today I want to go over Reysas Logistics. I'll give a brief overview of the company and what Pabrai has said about the company publicly, and then we'll dive into a valuation. So let's get into it. Okay, let's talk a little bit about the company itself. Reysas is the largest operator of warehouses in Turkey. They have about 12.5 million square feet of warehouses, 2.5 million of which is refrigerated. They have several Class A clients, including Amazon, Alibaba, Carrefour, and IKEA, just to name a few. So Reysas leases these warehouses to these big companies, and the terms are pretty favorable for Reysas. For example, 99% of the warehouses are leased for at least 10 years to these companies. And the company's warehouses are in prime real estate locations within Turkey. Okay, let's jump into how Reysas fits into Mohnish Pabrai's portfolio. I think he started investing in this company in 2020. Now, he talked about this to a group of students at Clemson, where he said that the company was valued at about $40 million in July of 2020. Today, it's trading at $48 million. So, assuming that he was buying in around mid-July of 2020, we are pretty close to his original purchase price. Reysas makes up about 8% of Pabrai's portfolio, and he owns a whopping 30% of the company. So that concentrated amount of ownership is usually reserved for insiders and management of the company. But Pabrai is considering himself basically a passive owner in this business. So the 30% stake actually makes a lot of sense for him. Pabrai says that the management of the company is wonderful. It's a father-son duo. They are great capital allocators. So he just wants them to do what's best for their company. He's happy basically to sit on the sidelines and let them do their work. I do want to mention that I have not figured out why Reysas stock dropped almost 50% last week. I am still trying to investigate that further. Wild fluctuations in stock prices, especially in these microcaps like Reysas, are to be expected. So unless something has fundamentally changed about the business, Pabrai is probably not worried at all. In fact, he says that he doesn't even look at his portfolio on a daily basis, so he might not even know that this has happened. Pabrai's initial investment thesis was that it was basically cheap on a quantitative basis, really cheap. It was selling for a fraction of the liquidation value of their property. Pabrai's thinking was that the market cap was at $40 million in July of 2020. So we take that $40 million divided by the 12 million square feet, and you're paying about $3.50 per square foot. So remember that these square feet are leased in prime locations in Turkey to long-term Class A tenants like Amazon and Alibaba. Now the company does have a lot of debt, so his calculation was they have about $17 per square foot of debt. He calculated that the liquidation value was around $50 to $60 per square foot. So if we liquidate the company at $50 per square foot and subtract that $17 of debt per square foot, then we're getting about $33 for every $3 that we invest into the company. So that's a whopping 11 times your return on your investment, just based on the liquidation value of the company. So not only was it cheap on a quantitative basis, but as I said before, Pabrai really came to understand that the management team was a father and son duo that were great capital allocators. So even if we 11x'd the market cap at that $40 million price point in July of 2020, the company would still likely be worth a lot more because of the decisions that the management team would make to further enhance the value of the company. So that was a little bit about Reysas and Pabrai's involvement in the company and his initial valuation for the company. So I thought it would be pretty fun to try my hand at valuating what Reysas today might look like in a liquidation. And I want to preface this with the fact that Reysas is a going concern, so the chances of liquidation are unlikely, but this kind of gives a minimum threshold to what we might expect if the business tomorrow up and closes. I took all the numbers for this scenario from Ticker because it offers a great way to translate the Turkish lira into US dollars right within the platform. So all the numbers discussed in the spreadsheet are in US dollars in millions. One approach to discovering the liquidation value for a company is basically to go line by line on each balance sheet item and figure out how much of that asset we can retain in a liquidation. What I mean by that is not all assets are created equal. So in the case of cash and cash equivalents, it's very likely that in the event of a liquidation that we would be able to capture 100% of that value. But the farther down the balance sheet you go, say for property, plant, and equipment, first of all, it really depends on how specialized or generic that equipment is, and where the real estate and properties are located. So we could capture anywhere from 100%, which is a lot less likely, to less than 50% of the value of those properties on the balance sheet. I put in some percentages here in column D that are basically quick and dirty percentages to use in a liquidation value. I got these numbers from Bruce Greenwald in the book Value Investing from Graham and Buffett to Beyond. So definitely read that book if you want to learn more about how to value something as a sum of the parts. So for cash and cash equivalents, we'll go with 100%. The accounts receivable, let's assume that we can only collect 85%. For inventories, we'll conservatively say that we can only collect 50% of the value. Normally I use 45% when I'm trying to do a quick and dirty calculation for capturing the value of property, plant, and equipment. In the case of Reysas, because the warehouses and property that it owns are actually very valuable in good locations and contracted to Class A tenants, it seems likely that 45% is just way too low. Especially when first trying to evaluate a company, I'd much rather be way more conservative. I'm definitely looking for reasons to ignore the companies, so the more conservative numbers, the better. And I'll leave a link to this spreadsheet in the video description below if you want to tinker with this at all or use it for other companies. And also in the spreadsheet, I'll map out how Pabrai is calculating his intrinsic value for this company, and maybe that'll give us a clue as to what he actually thinks the property is worth. It's actually been a little bit difficult finding financial statements that aren't in Turkish for this company. And I want to point out real quick that the stated property value on the balance sheet does not necessarily accurately reflect the value that a business owner would actually pay for that property. So it could be worth a lot more, especially something that's in such prime locations. It actually looks like Pabrai is adjusting upward the value that is reported for the investment properties and warehouses listed on the balance sheet. Based on what Pabrai has said about the liquidation value for Reysas, I'm having a hard time getting to that number of $50 to $60 per square foot without actually adjusting the value of the property that he's looking at. So based on what's held and carried on the balance sheet alone, it's not looking like we're seeing a $50 to $60 value liquidation. But even if we do use what's reported on the balance sheet, and even if we discount what we'd be able to acquire in a liquidation scenario, we're still having a margin of safety with this investment. But because this attempt at a liquidation value is an exercise in conservatism, it's totally okay if we use less than 100% or less than whatever number Pabrai is actually using. As you'll see once you play around with the spreadsheet, it's very clear that even if we have very low assumptions for the value of this real estate, we're not probably going to lose money on the investment. In column C, I have all of the balance sheet values listed out as they are reported in the financials. And then in column E is my adjusted value based on the amount realized of each asset that we can have. The total asset values here are way more conservative and muted than what Pabrai came up with. There is a pretty big discrepancy between my liquidation value calculation based on the numbers reported on the balance sheet versus what Pabrai has come up with. And let's not forget about that $40 million of cash sitting there on the balance sheet. Again, the market cap is about $48 million. So if we subtract that $40 million of cash on the balance sheet, that means that the rest of the business is being valued somewhere between, $8 or $10 million. So we have this huge discrepancy between this property that is being carried on the balance sheet at about $300 million and a market cap minus cash of only about $8 to $10 million. So just based on that discrepancy alone, we should have alarms going off in our heads that this is an extreme value. Now, I did this exercise just to emphasize how much of a value there is in this company, but I think it would be safe to assume that Pabrai's value estimations are going to be a lot more accurate and complete for valuing this company. And again, Reysas is a going concern and they have very valuable assets in these properties. So it's unlikely that a liquidation would even happen and that we would need to do this calculation of taking a discounted asset value and then subtracting all of the debt from it. It's just not very likely that that's going to happen. So have a look at the spreadsheet. Let me know what you think about Reysas. I'm really sad that as a US investor, I still have not found a way to invest in this Turkish company. If you have figured out a way for a US citizen to invest in this company, please let me know. I know in Europe, there are plenty of brokerages out there who offer access to Turkish companies. I know interactive brokers, for one. I had a conversation with somebody and they were able to invest. So if I were able to access the Turkish markets, I would be very intrigued to look more deeply into Reysas and possibly take a position. So this is potentially great news for you if you've been looking for an opportunity to get back into this company. Now, it remains to be seen whether or not there is a big change in the fundamental investment thesis and business of Reysas in general. I am going to be watching Pabrai's actions within his portfolio to see if he reduces his stake or maybe even loads up more now that he has another opportunity to take a big investment chunk. Although he may not add any more because he already owns a third of the company, which is pretty ridiculous. You may want to check out my video where I discuss Mohnish Pabrai's new spawner framework over here. Otherwise, tell me what you think in the comments below about what Reysas is looking like as a value play for you. Is it dangerous? Is it a trap? Just let me know what you think. Please like the video and subscribe to the channel if you enjoyed this deep dive into Reysas. I really appreciate you all watching this to the very end. Thank you so much, and I will see you next time.